All right, let's jump right in. We are going to crack open a playbook that's 70 years old, written by an absolute legend of Wall Street, W.D. Gann. You see, back in 1954, when he was 76 years old, he wrote his master stock market course. He basically tried to pour a lifetime of experience into it. So today, our mission is to decode its core principles.
And right from the get-go, Gann lays it all out. Forget about hot tips, forget about guesswork. For him, the market wasn't some kind of casino. It was almost like a science, and it was governed by rules. Success wasn't about being a genius, it was about being disciplined. He actually called his course Speculation a profitable profession. Now, think about that for a second. He wanted to take this wild, emotional thing we call speculation and turn it into a methodical, profitable business. This wasn't just some theory for him. This was his personal playbook. Now, before he even gets to a single chart or a single rule, Gann starts with the most important instrument in all of trading, the human mind. He really believed that every single trader is in a constant battle between two opposing forces. And how you manage that internal conflict, well, that's what determines if you succeed or fail. Gann saw this as a clear-cut battle playing out inside your head. On one side, you've got the foundation for success, real knowledge that you get through deep study and, of course, sticking to the rules. But on the other side, you have the foundation for failure, trading based on guesswork, wishful thinking, which he called hope, and panic, which he called fear. He even warns, hope will ruin you. It's that all-too-human bias to stick with a losing trade, just hoping it'll turn around. So, this brings us to Gann's very first, and you could argue most important commandment. It sounds deceptively simple, but believe me, this is the bedrock of his entire system. Everything else he teaches builds on this one core idea. Follow the main trend. That's it. His definition was purely visual, super logical. If you're in an uptrend, each peak is higher than the last one, and each valley is higher than the one before it. A downtrend, it's just the exact mirror image. See, your job isn't to predict the trend, it's to identify it and then ride it. But here's where Gann got really interesting. He had his own unique way of seeing the trend. He didn't just look at averages like the Dow. No, he tracked what he called the dollar trend. And what that was the total market value of all the stocks on the New York Stock Exchange. For him, this was like the ultimate health check of the market. If this total value was making new highs, then the main trend was, without a doubt, up. Okay, so with that mindset established and a clear way to identify the trend, Gann then lays out a set of very specific, totally non-negotiable trading rules. You can think of these as the guardrails to keep your emotions from driving you off a cliff. Now, here's the crucial part. Gann's rules, they often go completely against our natural instincts. He says to buy when a stock breaks out to a new high because that just confirms the trend is strong, and you sell short when it breaks to a new low. And a huge one, never, ever add money to a losing position. He saw that as just feeding a mistake. And above all else, always, always use a stop-loss order. He was absolutely relentless about this. A stop-loss wasn't just a safety net for your initial capital. No. Once you had a profit, that stop-loss became the tool to protect that profit. Why? Because he argued that profit is now your capital. The stop-loss takes you out automatically, it removes the emotion, and it preserves your funds for the next opportunity. It's that simple. So let's see how Gann put all this together in the real world. He demonstrated his whole method with a really powerful strategy. You find a strong stock in a clear uptrend and you buy it. And at the exact same time, you find a weak stock in a clear downtrend and you sell it short. You're literally trading both sides of the market. Okay, here's his classic example from back in 1951. Douglas Aircraft was a market leader, breaking out to new highs, showing all that strength. At the same time, you had Celanese Corporation, which was a total laggard, making lower tops, looking really weak. Two different stocks, two very, very different trends. And the result is, well, it's pretty striking. As you can see on this chart he drew, the two paths just diverge dramatically. That dotted line, that's Douglas Aircraft, and it's soaring higher, just confirming its strength. The solid line is Celanese, and it's just steadily falling apart. By going long the strong one and short the weak one, you're not fighting the market. You're harnessing two powerful opposing currents. So, what was the bottom line? Gann calculated that by putting up about $5,200 in capital to control 100 shares of each, this paired trade would have generated a hypothetical profit of $10,600 over 3 years. That's more than doubling your money just by following the rules. So, when you really get down to it, this dive into Gann's 1954 playbook reveals a blueprint that's not built on some complex formulas, but on timeless principles, understanding the market's main direction, and probably most important of all, mastering your own emotions.
He ended his entire course not with some hot stock tip, but with a quote from the book of Proverbs. For Gann, successful speculation wasn't really about getting rich. That was just a byproduct of seeking real wisdom and true understanding. Which leaves us with a final question. Today's markets are totally dominated by high-frequency trading, by algorithms, and by artificial intelligence. But the human being behind the account is still prone to the same old hope and fear. So, do these 70-year-old rules, which were designed specifically to take human emotion out of the equation, do they matter more now than ever before?